is the economy really in such a state here domestically? And you can both answer. Jump in. Can they really start raising if all these other central banks are easing and easing hard? I mean, how divergent from that path can they go?
Well, if you look at the economy, obviously the growth picture has softened somewhat. The last single data point, which is subject to revision and has a huge error in it, was a little bit soft, which is the non-farm payrolls. But I think you almost never will have a point at which both the domestic economy, in terms of growth and inflation, and international events and markets are all aligned to give you the sort of the signal. And there's a Fed meeting where you have, which is only every other Fed meeting, where you have a press conference and you feel comfortable doing that. And so it's just very, very difficult. I mean, they're never going to find a perfect time.
At least given the state of the global economy right now where we are, that's not realistic. Let's take one look at the stock market here. Check out the Dow, see what it's doing, see what the response is. So you can see, 24 points, not a big response. I mean, this was pretty much what the market expected. You looked at the odds of a hike today, they were virtually non-existent.
Right.
Take it out to December, it's up around 34%, 33%. So I don't think the market is surprised that the Fed said December is live. That's what
right. But I think John is right that I think maybe a lot of the things in the statement is trying to convince the markets that December is very much on the table. I think the markets maybe have been a little bit complacent, but rightfully so, because I think there's a big debate that's going on within the Fed right now about those international developments, right? Is the ECB and Bank of China, is that a good thing or a bad thing for the U.S. The fact that they're easing, is that a good thing or a bad thing? On the one hand, it could be a good thing because now the Fed is not alone in fighting this problem that we have called lowflation. But on the other hand, if they ease, and as we just talked about, if the Fed tightens, what does this mean for the U.S. dollar? Well, what it probably means is it appreciates further.
Well, and it gets to another question is, the things that the ECB is going to do, they say they're going to do, the things that the People's Bank has already done, the things that the Bank of Japan is expected to do later this week, are they going to even affect their own economies? Forget what they're going to do for the U.S. I mean, are they even going to have enough of an impact to affect inflation, to affect growth in their own economies? You talk about lowflation. I mean, we are very close. We're really skirting along the edge of, inflation, deflation. No one wants to say the D word, but I mean, we're a little closer to it than anyone wants to admit. Again, it comes out to this point. Spencer, are we going to get to December and again, the Fed is going to pull the Lucy with the football? Because the reality is that they are just not in a position to raise rates.
I mean, the interesting thing is that they say data dependent. They say they're always going to be dependent on data. And you almost, if you look at what the market bets on interest rates have been correlated with, it's S&P 500 dependent. It really is. I mean, once markets weaken substantially, then the bets are pushed out. When markets strengthen substantially, then the bets come in closer. And that's, they obviously they don't say that, but I mean, this QE and zero interest rate policy has been largely, in theory and in practice, about affecting asset prices, and that's been the lever. And you talked about all these central banks acting, and where are we? I mean, we're now 7 years into it. In December, it'll be 7 years into zero interest rate policy in the U.S., and even longer some places and shorter other places. But it's been a long, long time, and you feel like we're getting diminishing returns from this really extraordinary and somewhat risky policy.
What do you guys think? Look, this weekend is Halloween, holidays are starting, the year is going to come to a close pretty soon. There is a meeting in December. What will you be looking for? And I want to get both your opinions. Data points, developments, anything. What are you going to be looking for over the next several weeks that will give you some indication of what the Fed might do?
There's a few very important things that are on tap between now and December. And actually, the fact that we do have this phrase in the statement that it might be appropriate to raise the target rate at the next meeting if the data essentially cooperates. So we will be looking at an array of things. So, for example, we will, of course, be looking at the payrolls reports. But the bar, because of the statement, has now actually been lowered. We used to think that maybe we need to create 200,000 some jobs on a monthly basis. Well, the Fed has told told us that even 142,000, as we have seen in the month of September, that's actually fine as long as the long trend is in place. So we will be looking at those payrolls numbers. We want them to be somewhat strong, but not necessarily 250,000 strong. The other thing we'll be looking for is the minutes of this FOMC meeting, and of course the Janet Yellen testimony in early December.
Yeah. All right, Spencer, what do you think? Last answer.
Okay.
What are you looking for?
So, as Anastasia said, we'll be looking. We have two more jobs reports. We'll be looking at what those numbers are. That's the most important thing. We'll be looking at things like ISM surveys too, because those have been pretty soft recently on the manufacturing side. If those confirm weakness, or if the services side of the ISM becomes very weak, I mean that actually is a fairly reliable indicator of recession risk. Then that might raise some red flags at the Fed. And we'll be looking at what they say in statements, public statements outside the minutes as well.
All right, Anastasia, Spencer, thank you very much for coming in today. Appreciate it. That is it from here at WSJ. Again, to recap for you, the Federal Reserve left interest rates unchanged at the October meeting, but they did drop some hints that December is a quote-unquote live meeting. They may be looking to raise rates depending on what the economy does. I am Paul Vigna. Everyone, thanks for watching.